Hi, more revision in less than 15 minutes. So today, look at the income statement from the CSEC syllabus. So remember, the income statement is also known as the Statement of Comprehensive Income. It was previously identified as the Trading Profit and Loss Account. It is one of the principal statements in a set of financial reports prepared by a business to show the profits that it made, right? They had made over the period reviewed. Took a year or 6 months around. So the declaration statement should read income statement for the year or whatever period is given and the date that is being referenced to. All right? Now, when you're doing the income statement, you could use either the vertical style or the horizontal style. Right? The vertical style is basically known as the modern style, and that's because it's going to use a straight line presentation. It uses 3 columns, and you have your sales. You're basically adding and subtracting. So the sales less your cost of goods sold will give you a gross profit. Then you add on your other incomes that will give you a total income, and you take away all your expenses, and that will give you your net profit. Or you go for the more the horizontal or the more traditional method, which is basically using debits and credits, right? So in this case, your revenues, the things that you earn, will be on the credit side, and the things that you're going to deduct from the revenue will be on the debit side, right? So basically, you will have your sales on your credit side, but your cost of goods will be on your um, debit side, or your left side, in other words. So surely, if you take away the cost of goods sold from the sales and you made a profit, the profit will fall on the left side. All right? And it's because of the count, you got both totals gotta be the same. So therefore, when that will complete the top half of the income statement, and then now you gotta move to the bottom half. So you transfer the gross profit back over to the right side, so it is now on the side where the revenues are, and you're gonna add to that the other incomes that you'd have had. Remember, these other incomes are things like discount received, rent received, commission received, sale of gain on the sale of assets, anything of that nature, right? And so you're gonna have that over there, and then obviously you will take away your expenses now on the left side, right? List all the expenses and take them away. And again, if the expenses are less than the total incomes, then obviously your net profit should fall on the left side as well. And because it's income, as I said, both totals at the bottom same. So you can see the traditional here was a little more, a lot more things to do than if you just pick the vertical method. So in this presentation, I'm going to be using the vertical method. All right. So I have a blank page here. So we're going to try to do the income statement in steps. All right. So step number 1 is to calculate the net sales. And net sales, if you recall, will be sales less sales returns or returns in. And then once you have that, you move to step 2. Step 2 is to calculate the cost of goods sold, or what we call the cost of sales. And that, you could break it down into 2 parts, right? You could first find the goods that were available for sale, and then you could find out the cost of the goods that were sold. So the goods that were available for sale is simply the inventory that you had at hand, in other words, the goods that you had when you started out the period, plus the goods that you purchased. Now, notice it's saying net purchases, and the reason why it's saying net purchases is just how you have net sales. It's net purchases because you're going to adjust the purchase figure. For example, you may have returned some of the goods that you bought from the suppliers because they were damaged. So you have to deduct that, right? Or you may have had to pay carriage to get the goods delivered to your site. So therefore, you will add the carriage because that will increase the cost, but obviously you will subtract the returns out, right? The purchase returns, because that will reduce the amount you have to pay for the purchases. So therefore, as I said, inventory plus your net purchases will give you the goods available. And so if you take away from the goods available, the inventory that you still have on hand at the end of the day, right, inventory carry down, then that would simply obviously tell you the cost of the goods that you sold. All right, so from step 2, we move on to step 3. Step 3 is to find the gross profit. So the gross profit is simply net sales minus cost of sales. In other words, step 1, net sales, minus step 2, cost of goods sold, give you the gross profit. All right? So once we have the gross profits, then we move to step 4. So step 4 is to find the total income. So the total income would be then, as I said, the gross profit that you just calculated, and you're going to add to that all the other incomes that the business would have generated. So as I said, the other incomes, you can recognize them because they will carry that word received, right? Past tense, received. So therefore, as I said, rent received, discount received, commission received, and of course, if you receive a gain on the sale of assets, or you had a reduction in your allowance for doubtful debts, then these are going to be the additional incomes. In other words, these are going to adjust the gross profit, right? And that adjustment to the gross profit is called total incomes. So that was step 4. So let's move on now to step 5. So for step 5, we're going to enter the expenses. So we're going to go through the question and we're going to look for all the expenses, right? And we're going to list those expenses. And remember to go to the notes of the question and read those notes to see where the examiner is saying to you, make an adjustment to these expenses, because that's generally what the notes refer to, right? They tell you to make adjustments to these expenses. So remember, those adjustments could be that because the expense was prepaid, or it was accrued, or it's provisional, like provision for depreciation or provision for doubtful debts, right? So you have to make those adjustments. And once you've made those adjustments, you total up and you got your total expenses, right? So from step 5, you move to the final step, step number 6, which is to find the net profits. So just like how you found the gross profit by taking away step 2 from step 1, you're going to find the net profit by taking away step 5 from step 4. So therefore, total income minus total expenses will give you net profit. All right, so let's do a quick review now. So step number 1 is sales less sales returns. Step number 2 would be the goods available less the closing inventory give you the cost of goods sold. Therefore, step number 3 would be net sales minus cost of goods sold, right? Give you gross profit. Step number 4 is to add the other incomes onto the gross profit to get your total income. So at this point, I would like to say that most of the times the question does not have step 4. So if it doesn't have step 4, that's not a problem. You just bypass step 4 and go to step 5, where step 5 says enter all the expenses, right? That's what the 2 X's are for. You can enter all the expenses, and then you're going to get the total. And again, remember to make those adjustments to those expenses, right? Remember to read the notes and make the adjustments to those expenses. Now, once you have the total expenses, then the last step, step number 6, says subtract the total expenses from the total incomes or the gross profit, whichever is the one that's available at that point, and that should give you your net profit. So that is the end of our review of the income statement. So until next time, keep revising.